right, welcome everybody to Finance 443. Because it's 443 and I had many of you in 445, I thought when I got assigned the course that many of you from 445 wouldn't be in this class, but I'm excited to have many of you that I recognize from previous courses, if not the last one I taught, 445, maybe a previous course some months back. So welcome. Thank you for participating. Thank you for being here. Hopefully we'll have somebody join into the live sessions. It's a smaller class though, and I realize this is a late hour for many of you. So, but this allows me to, with my schedule, get this in earlier in the week so that you can review it sooner than later and have the materials and support that you need for the coursework. So, although many of you have had me before, and I know that this is old hat for many of you to be in a new course, many of you have, this is towards the end of your degree. I still want to spend just a few minutes going over expectations and some basic rules of a class like this, just so that no one can say, hey, I didn't know about that. We've got to go through those. So we'll spend a few minutes with that here at the beginning. Then I'll give you some slides, not a lot of slides about from the course. The material for this course is a little bit different than previous courses that you may have had. First of all, there's no ebook, so little different. We're not going to be, looking through chapters or anything like that. What we're going to be doing in this course is primarily relying on material from Investopedia online and the investment information that site contains. And so be sure, because there's not an ebook, to pay extra close attention to what the readings and tools are for each week and make sure and review those. Some of those links will change periodically because Investopedia does change as a site. It doesn't stay exactly the same from day to day, from month to month. And so if you go into it and just don't find what you expect to see, zip me a quick email and there might be an issue. I can't check it multiple times a day to make sure it's still on track. And so sometimes those links get off. Don't panic. We'll make sure and get you a replacement link or a replacement site or place to look up information. So as an overview, the course is meant to give you some feedback and some information about investment services, and specifically as it pertains to investment professionals. So the course is not assuming that all of you are going to get your degrees and then get licensed to sell investments, but what it is assuming is that it is helpful, and I think a great exercise, to understand what investment professionals go through and the rules and regulations associated with investments and investment professionals, so that we as consumers potentially have maybe a 401k down the road or an IRA or maybe just a regular investment account of some kind, so that we as consumers of those products are just better educated consumers. Like in any business, the more we know, if we're checked into a hospital, for example, the more we know about what nurses and doctors do, the more we can help ourselves get the right kind of service from those personnel. If we're going to buy a car, if we're going to buy insurance, if we're going to buy, you name it, any kind of product, the more we know about that person's rules and regulations and career, the better actually and more informed we can be and help that individual to help us in the right ways and get the right kind of service from our experience. I was just thinking about, when you go through the process of buying a home, which is something that we're in the midst of right now, my wife and I, and when you're in the midst of that process, having someone like a realtor to bounce things off of and get information from is helpful. It may not be that they, are educating you and helping you understand something new, but it's good to have that support. And the more you understand about the home buying process, about real estate, about mortgages, the easier that process is. And I think the better you'll probably end up doing in the end. You'll feel like you've made better decisions because of the information and education that you have. The same is true for investments. Most all of us are going to need investments at some point or use investments at some point to get us towards our retirement goals. And because of this, a course like this can be very helpful. So like I say, don't get discouraged right off the bat. I have a few people every single mod when I teach this course where they say, hey Dave, I'm not interested in being an investment professional, so this doesn't seem to apply to me at all, and I'm kind of frustrated that I even have to take this course. And my response every time is, be patient with the course. The course is not difficult, and it's good material to understand so that you can, like I say, be a better consumer of investment products as time goes on, as your lives go on, and as you have different experiences with investments. This information can help you to be a better consumer, okay? A better educated consumer of those products. All right, so that's a little bit of an overview of the course. Should be some interesting information about investments and investment professionals as a group or as a career. So tonight, as I mentioned before, we're going to start with expectations. We're going to go to some slides, and then in the end, we're going to make sure we cover the 25 questions that you'll have on the assessment this week, all of which are multiple choice or true false. And you have an hour to do it. Should be plenty of time if you've taken a few notes from tonight, and if you've reviewed the information online from Investopedia, specifically a PDF of the outline for the Series 7 examination. So most of the outline is just bullet points because it's an outline, but pay extra close attention to the beginning of the outline where it actually talks through and explains some different things about the test and about the information that you need to know for a test like this, okay? So it'll also be applicable for your examination this week, and that's where the material for the examination comes from, is that outline, okay? All right, so as far as expectations for the course, shouldn't be any surprises here. Let me just check who just dinged in. One sec. Welcome. Welcome, Wanda. Thanks for joining. Can you hear me okay? I've got you muted, but can you let me know by typing in if you can? Great. Well, welcome. Thanks, Wanda, for coming. We just got done with kind of an overview, a broad overview of what the course is going to be, and then also what we're going to try to cover tonight. The first thing that we're going to do is just really quickly go through expectations. I think I've had you, Wanda, in one of my classes before, so some of this is going to be a repeat. All of it should be a review based on the fact that you've had other online courses, but I always find it helpful to make sure and put those expectations out there so we don't have any confusion. Then we'll go over some slides, and then we'll make sure and cover what you need to know for the test this week, which is 25 questions, all of which are multiple choice and true false, okay? So welcome. Thank you for coming, and thank you for being here. It always makes the class a little bit easier for me to teach if I've got at least one person to bounce things off of and ask a question once in a while. So appreciate you being willing to be that one. All right. So as far as expectations are concerned, most of these are going to be a repeat, but let me just whip through them as fast as I can. So easiest way to get points in a class like this is a combination between checkpoints and discussion board, right? So checkpoints, just stay on top of them, stay consistent. Know that you've got at least a half a letter grade worth of extra credit that's available if you'll just do your checkpoints, right? So some people will come to me at the end of a course and ask for extra credit, and the first thing I will do is to look if they were consistent with checkpoints and discussion boards, because those are your two easiest ways to get points, and specifically in the instance of checkpoints, it's the easiest way to get extra credit, right? If you want extra credit, do the checkpoints. You get a lot of extra cushion points, as I call them, to help you out with your grade. Really impactful when I was going to school to do the little things, along the way to get those extra points. But as much as a half a letter grade, like I say, is available from just checkpoints. As far as discussion boards to get full credit, you know basically the drill on this. You need at least 3 posts each week by Saturday at midnight. You need 1 main post by Wednesday at midnight that's got 2 to 3 paragraphs, fairly substantive, needs to answer the question or topic that's being raised by the instructions, and it needs to have at least 1 or 2 references. Okay, so that's the main post that's due by Wednesday at midnight. The 2 peer responses just need to be substantive, but they don't need to be multiple paragraphs. They need to be multiple sentences, right? So sometimes I will give 1 word or 1 line or 2 line answers or responses because I'm giving multiple responses and posts each week. But for you, your 2 peer responses need to be at least a paragraph. They need to be thoughtful. They need to in some way interact, but also show that you're thinking through what's being talked about, not just giving a quick response to get through it, okay? So for full credit, for the full 60 points, 3 posts, 1 substantive, 2 peer responses, and then meet the requirements and deadlines associated with the discussion board. 2 more quick things about the discussion board that maybe are a little bit different between my expectations and other people that you've taken courses from. I fully expect to not see cutting and pasting onto the discussion board. And along with that, I fully expect not to see someone else's, something that you've just found online. I want the discussion board to be a place that you can reflect, and represent different research that you've done, but you should put it in your own words and then still reference, of course, because we're not, we don't want to plagiarize somebody and not give them credit if we found the information online. But we do want to make sure that it's specifically for discussion boards, that discussion boards are in our writing. There are perspective, there are opinions. It's us thinking through the topic, right? It's not meant to be an exercise of just finding information and then regurgitating it onto the discussion board. It's an exercise of thinking through what it is that we're talking about and trying to come up with opinions and perspective, because that's the kind of thing that we can help each other with when it comes to the interaction on a discussion board, okay? So any questions on that Judy or Wanda, anything that alarms you there is any different from anybody else as far as your other instructors? Shouldn't be any different, shouldn't be any challenges with that, but I do want to make it very clear that I fully expect it not to be a place to have just a cut and paste job, right? And sometimes when I see different fonts within the discussion board, that's kind of a red flag that we've just been cutting and pasting right from somewhere online, instead of trying to think through it and come up with our own perspective. So the cool thing about the discussion board, right, Wanda and Judy, is there's no wrong answer, right? As long as you fulfill the requirement of the content and the amount of posts that you're supposed to do, you're going to get full credit. I'm not ever going to say, hey, I don't agree with you on this, and so I'm not going to give you full credit. That will never happen. Sometimes I will say, hey, there's not enough content here, so I can't give you full credit, okay? So use discussion boards as an opportunity to think through and have an opportunity to really give some opinions. That's the whole point. Chris, welcome. Judy, welcome. Thanks, Wanda, once again for coming tonight. So we have gone through expectations for discussion boards really quick, but they're consistent probably with every other discussion board forum that you've ever had. I would encourage you to listen to just the first few minutes of the class tonight to get kind of the overview of the course, get a feel for what we're doing, what's different about this course, and then also just the basic expectations reminder on discussion boards. So we talked about checkpoints, we talked about discussion boards. Assignments, you've got 3 assignments in this class like you usually do for weeks 1 through 3. Each one of them is worth 120 points, which in the end is worth more than a third of your grade. Assignments are the #1 reason that people don't pass online classes. I've been doing this for 6 years. I've probably taught, over 100 different mods, and it's consistent. The folks who miss assignments are the ones that are most at risk, I should say, of not passing a class. As you can imagine, if you don't get the 3 assignments in, it's very difficult, right? You'd have to be perfect on everything else just to barely squeak by. And of course, if you want an A, which I hope everybody here does, you follow the instructions, you turn the assignments in on time, and we're in great shape, right? There's no problem there. So if you have any questions on the assignments, let me know. This week's assignment basically wants you to give some feedback to a link that it gives you on Investopedia about the best and worst performing sectors of the market, which is basically just referring to different sectors of the market like technology, manufacturing, retail. Those are different sectors of the market. And what it's wanting you to do is kind of an exercise of evaluating what sectors are up and what sectors are down, and maybe trying to think through why, right? What is the reason why some segments of the market are doing well and other segments of the market are not? Because when we talk about the Dow going up, and a great example is post-election. So Donald Trump gets elected right a week ago. We're not going to get political here, but a lot of people were surprised by that, right? Because the pollsters had said that Clinton was going to win. And then the following week, right, this last week since the election, the market overall, so if we just look at the Dow Jones, has done very well. A vote of confidence for, Trump getting elected. Having said that, the main group that has done really well has been banks. Okay, so that's the sector. Banking or financial services is the sector that has been a huge outperformer the last week. Banks have gone up 10 to 14%, while the rest of the market has gone up a few percent. And many parts of the market, like technology, for example, companies like Apple, Google, Netflix, those really strong technology companies are actually down the last week. So I think the point of this exercise on the assignment is to evaluate, okay, some of us just think in terms of, okay, if the market goes up, it all goes up. If the market goes down, it all goes down. But really, the market is made up of so many moving parts that at any given point, you can have some segments doing really well, right, and other segments doing really poorly, even though the market's moving one way or the other. Okay, and this last week is a great example of that. Like I say, banks have done really well last week, and technology's done really poorly, and also bonds have done really poorly this last week. So anyway, just an interesting exercise to kind of get that, to think through why different sectors do well at the same time as other sectors maybe not so well. Now, the link on the assignment, I tested it earlier today for Investopedia. It doesn't appear to take you to the top performing sectors and worst performing sectors. And so I've posted on the announcements board tonight, I attached a link to what's called a Guide to the Markets by JP Morgan that they publish every quarter. It's a great tool for information and charts about investments in the market, usually used, of course, by investment professionals, but I think it's a helpful chart for anybody. So it's just a PDF that you can open. On page 10 of that PDF, and I've given you this instruction on the announcement board, so you don't need to hurry and write down any kind of notes about this, but on page 10 of it, it gives you sector returns for recent history sector returns. Okay, so you can use that page 10 to basically do the requirements of the assignment if the link on Investopedia is not getting you to the right information. Okay, so don't panic on the assignment this week. Look to the announcements and look to that link that I've given you already to get different sector information and feedback for this week's assignment. The assignment, probably about a page and a half of writing is all, but just your opinions and feedback on why some sectors do well and better than others at different times. What kinds of things, what in the economy or what in politics drives, one sector to do better than another. And to our example of tech versus banking the last week post Donald Trump, banking has done really well because Donald Trump is talking about reversing Dodd-Frank, which is a lot of regulation on banks. So banks, of course, like the idea, and investors in banks like the idea of regulation being lessened on banks, right? So that's why banks have done really well this last week. Technology is doing poorly because one of the things that Donald Trump talks about a lot is how a lot of your tech companies here in the United States manufacture everything they do overseas, first of all. And second of all, they keep a lot of their money overseas. They don't repatriate their funds and pay taxes here in the United States. A company like Apple specifically has kind of got a target on its back because Apple manufactures everything overseas. And in addition to that, they keep a lot of their money, their billions of dollars on their balance sheet. Much of that money is held overseas so they don't have to pay taxes here in the United States. So tech companies are a little bit under fire and banks are on fire, right? They're doing really well. So that's kind of a difference of different sectors in the very short term, just over the last week. Use the assignment as a fun exercise, an interesting exercise, I should say, whether or not it's fun or not, to formulate some opinions about other things and other sectors, other ways that other sectors are influenced by the economy, by politics, by all kinds of different things that could be happening in the world. Okay, so that's the assignment for this week. The discussion board for this week is pretty straightforward. No need to review that in great detail, although you've got some things to give feedback to there. And then, like I say, the assessment, which we'll cover at the end of class tonight for the last probably 10 minutes, has 25 multiple choice questions and true-false questions. Now, just a quick heads up on assessments. Assessments, we're going to have one every week. We're going to have a final, that's pretty comprehensive. So we've got lots of information to cover. All of it's going to come from the content on Investopedia, readying folks for the Series 7 exam. Okay, and the Series 7 exam is basically the hoop that investment professionals jump through in order to be an investment professional. Okay, so like there's a real estate exam for a realtor if you wanted to be a realtor. There's a bar exam if you want to be an attorney. In the world of investments, the Series 7 exam is kind of that entrance exam that you have to pass in order to sell investment products. Okay, so that's where this material is. What this material is geared towards. Of course, we're not interested in making sure that you can pass the Series 7. If you have that in mind, great, because this will be a nice precursor to that. Or if you've already passed it in the past, that'll be nice because you'll recognize a lot of this material and remember it. But we're not worried about whether or not you can pass the Series 7 exam. We just want to give you a taste of the information that's on that exam because it's great information, like I say, for you and I to be better consumers of investment products and understand markets and investments a little bit better. Okay? All right. So assessment this week, we'll cover, like I say, like we do every week in the session in order to give you the topics that you'll need to make sure and look for and research a little bit before the test. That will make the hour easy, to get 25 questions done if you've done a little bit of pre-work, as far as research and reading, which is what these courses should be all about. That should be a minimum expectation. If you don't read and research at all or take any notes before the test, then sometimes we get caught, needing more time, right? So be careful that you put in a little bit of time beforehand so that when you get to the test, you'll be in good shape. Not only will you be more confident about your answers, but also you can get through it in the time allotted. Okay? All right, Chris, Judy, Wanda, you're here. Appreciate you being here. Any questions about the course before we get started with material? And while you're thinking about any questions you might have, one more quick thing. Late work is accepted all the way until the end of the course on Saturday at midnight. I can't extend you beyond Saturday at midnight, but I can accept anything up until that point. However, I don't give full credit for late work. So that should be your expectation too, right? If you turn it on time, you have the ability to get full credit. If you don't turn it in on time, there's not the ability to get full credit. You'll get most of the credit. So I still encourage you to get it in even if it is late. Judy, great question. I mentioned this at the beginning, but this is a little bit different course. There is no ebook. Some people get into a class like this and they get really anxious. They kind of have an anxiety issue with the fact that there's no ebook in the course. It's okay. It's different, right? It's different than what you're used to, but that's just fine. The material primarily for this course is going to come, as I mentioned, from Investopedia and the information that Investopedia has for the Series 7 securities exam. Okay. Yeah, it'll be interesting. What it does do though, Judy, is it forces you to use some of the online sites that in real life we do use, right? Most of us don't use textbooks to find answers to information. And so this is a good course to help you find content that you'll be able to refer back to the rest of your life instead of just while you're in this course and then not ever again. Okay. So, but it is different, throws you for a little bit of a loop because it's not formatted the same way, as some of your other courses, but that's okay. We'll be fine. You'll get through it. Like I say, this is not a really hard, difficult course. There's not a lot of math in it. There's not any accounting in it. I mean, it's a pretty straightforward concept course. But I will say that there is a lot of material. When you look up the outline for the Series 7 exam, you're going to find the PDF is 44 pages long. Okay, so before you think, hey, it's probably just a couple, things on a website, there's a lot of content about the Series 7 exam. And that's why we're going to break it up all 4 weeks, so that you'll be able to take a chunk off each week. And also, like I say, we'll prepare you each week for what it is that the exam for that week is going to test us over so that you can study specifically those things and not get overwhelmed by the content. Okay? One more quick thing. Email is my preferred mode of communication. You're welcome to call me. My cell phone is listed. You can text me. Actually, I should say that if you're willing to, I actually can respond very quickly to texting and appreciate texting. So if you've just got a quick one-off question, texting's a great way to do it if you can do that. If not, zip me a quick email. And you can call me. Just be aware that I probably will not be able to take your call, but I will try to call you back within a day, at a time that I can. Okay? So should be similar to other classes you've had, but just want to give you a heads up that I do appreciate and like texting. Some professors I guess don't, but email is a great mode of communication with me as well. Phone, not so much, just because of my day job. Work at Zions Bank and can't take calls when I'm in with clients and trying to help clients with their investments. Okay. What else do we need to cover before we get into the material tonight? I'm just trying to think if there's anything else. We've talked about, minimum expectations for everything. We talked about how late work is available. We talked about how primarily extra credit comes from checkpoints, right? I'm not too interested in having a discussion about giving extra credit if we're not doing the things that allow us extra credit that are built into the course, right? So having said that, if you do everything in the course, you turn everything in, and for whatever reason you bombed a test or something like that, and you're just not getting the A or A minus that you're always trying to get, you're welcome to email me. We can find something extra for you to do in order to get the grade that you want or need, if you've put in the effort, to that point. So I usually don't have those conversations until the final week. Okay. Okay, there was one other thing, and I just skipped my mind. One other thing about the course. Oh, one quick thing that's a little bit different between courses that I teach and maybe some of the other teachers that you've had or have had in the past, and that is that on assignments, if you do an assignment and turn it in and I give you feedback on it, I'll almost always, if you don't get full credit, let you know what you did and encourage you to resubmit for additional points. So for example, if you turn an assignment in and the instructions said, hey, make sure there's 2 to 3 pages, and you turn in 1 page, I will grade that assignment. I will tell you why you didn't get full credit, and I will encourage you to resubmit and fulfill the requirement of the instructions for additional points. So just keep that in mind. Actually look at your grade feedback, because if you don't get full credit on something that was turned in on time, right? We know why we don't get full credit if we're not on time, but if it's on time and doesn't get full credit, it's likely that I'll encourage you to resubmit if you would like to for additional points, okay? And I just do that because I find that sometimes we miss something in the instructions, or we just don't understand something about the instructions. And so if that's what happens, I'm happy to have you resubmit, put in the effort, and get the additional points on assignments specifically. I don't allow test retakes, and there are other things that are more rigid, but as far as assignments are concerned, I'm happy to have you resubmit until you get most of the credit, so that we understand the concept and can fulfill the requirements. All right? Okay. Looks like I've heard from everybody. Judy, Wanda, Chris, I see that you've all entered something in on the chat board, so we know you're all alive at least. Maybe not awake, but alive. As we go through the material, I go fairly quickly through material, so as I do, please, if you've got any questions, let me know, right? Don't sit in silence if you've got any questions. Anything that you can think of that is related to what we're talking about, I'd be happy to answer, so zip it into the chat board and we'll get to it as I break in between topics, okay? All right, so the slides for this course come from a textbook that gets people ready for the Series 7 exam. So before I confuse you and you say, hey, why are we looking at slides that look like textbook slides and we don't have a textbook, know that these slides came from something that I prepared for a previous course when we did have a textbook. This one we don't have a textbook, right? Just to remind you. But it does kind of bite off different segments of the material, and I like that kind of format. So we're going to use some of these slides, even though they don't match up with the Investopedia information perfectly. They do divide up the information very well. Real quick though, I actually wanted to show you, let me see if I can get to it. I wanted to show you the PDF. Okay, so first of all, can you all see the returns and valuations by sector page that I'm looking at? Okay, this is the page that I was alluding to and I meant to show you earlier when we were talking about the assignment for this week. I mentioned that the link for the assignment to Investopedia might not be getting us to the right information, and that's fair. Investopedia information changes, and links, they change all the time, right? That's a website that changes all the time. So back when this course was built by the school years ago, Investopedia had a link that just showed you different sectors and how well each sector was doing versus other sectors, so best and worst of the different sectors. This is a slide that I've posted on the announcement board that I alluded to earlier that shows you recent history on these different sectors. Okay, So it shows you quarter to date, which is the QTD, so that's the last 3 months, and the last 3 months through the end of September, right? So it's not really current. It's not post-election. You can look that up yourself if you're interested. But this is through the third quarter of this year. It's year-to-date information, right? That YTD number. Okay. It's since the market peak in 2007. That's how these different segments have done. And then how these different segments have done since the market low, which was in 2009, back in the Great Recession. Okay. So there's a lot of numbers on this page. You don't need to look at all the numbers, right? But you can basically get what these different sectors have done over the past quarter and over the past year and since the market peaked and since the market crashed based on these numbers in the middle of the page. So just as an example, if we look at energy, the energy sector in the middle of the page, okay, and we go down, the year-to-date return on energy, that sector, is almost 19% through the third quarter of the year. So that's really good, right, for the first part of this year. If we look at it since the market peak in 2007, it's only up 9.5% since the peak. Okay, so in the last 9 years, you've only gotten 9.5% return on energy. Why did that happen? Well, this is where, you know, the assignment gets interesting. We can look at energy, we can do a little bit of research and find out that energy is driven mostly by oil prices. And oil went from $149 a barrel down to about $29 a barrel at the end of last year. And that change in oil prices has basically blasted every single energy company in the United States. So the reason you only got 9.5% from the energy sector over the past 5 or 6 or 9 years is because oil prices primarily have driven the pricing of all these stocks down significantly. Okay. If you took a different one that's done much better, like consumer staples, okay, up 143% since the market peak, up 243% since the market low, but quarter to date down a little bit, right, for the last quarter. Year to date up about 7.8, so decent for the year. Consumer staples are things like Procter & Gamble, Johnson & Johnson, companies that sell us our toilet paper, our Band-Aids, our dish detergent. Those are consumer staples, right? Things that we use no matter what the market does. So they'll tend to be a little more stable and consistent. But during times when the market does really well, sometimes they lag that a little bit, like they did this last quarter. So anyway, there's all kinds of different reasons why a certain sector might do better or worse over a certain period of time. You're welcome with this assignment to go beyond even this page 10 of this PDF that's on the announcement board. You could talk about what I just alluded to, which is the post-election sector returns, right? So Trump's been elected. The last week, what have different sectors in the market done, and why have some sectors done better than others? And it's just your opinion, right? You don't have to. I'm not going to say, oh, I disagree with you, so you don't get full credit on the assignment. What I want it to reflect is that you've thought through what could be some potential reasons, and then you've also researched a little bit and tried to find what's some potential reasons for either a sector doing better or worse over the last either recent history or, like I say on this slide, you could even go back, 9, 10, 11 years, right, since 2007. Okay, so that's the assignment. That's the slide that I've got posted on the announcement page of our site. There's 71 pages in that PDF. I wasn't able to cut out this one slide, and so just go to page 10 of the PDF. You don't need to look at all the other slides unless you want to. There's a lot of good information, as I mentioned, and it puts it in charts like these to try to help us understand it a little bit better. Most people just look at it, looks like Greek, looks like a different language to them. But if you spend a little bit of time with this slide, I think you'll find it has some good information and feedback. Okay? All right. One other quick thing I wanted to show you before we get to the slides of the course is this examination outline. Okay? This is the outline that you get to by going to Investopedia, the link on the readings and tools. So you get to this link, which is from the website. This is under readings and tools, right? So here's the FINRA website. This is where it leads you to. And then from this site, you go to the Series 7 content outline, okay, which is hyperlinked at the top of the page that we're looking at under content outline, right? There's a hyperlink, and you click on that, and that's what takes you to this PDF that's 44 pages long that I told you about. Okay. It's the content outline for the Series 7 examination. Okay, so it gives you the outline here at the beginning, and then it gives you an introduction, the purpose of the Series 7 exam, gives you eligibility issues, tells you a little bit about how the content is developed, why it has what it has, how we maintain the test, what different segments are going to be on the test, how it's administered. Okay, and then it goes right into information. Okay, and just outline form of the information. All right, and then each one of these segments you can find out more information on Investopedia or on the FINRA website, but that's the outline. Okay. All right, it's exciting stuff. Why does it say FINRA at the top? It's the Financial Industry Regulatory Authority. What is FINRA? FINRA is under the oversight of the SEC, which is the government agency that oversees investing in the United States. The SEC is like the IRS for IRS for taxes. The SEC is for investments, right? They're the head dog. They're the head regulatory body. But just like accounting, in accounting you have generally accepted accounting principles, or GAAP, right? Which is developed by professionals in the accounting business. Okay, so in essence they kind of self-regulate themselves. They develop their own expectations and minimum standards. They don't rely on the IRS to come up with everything, right? The same is true for the investment world. FINRA is made up, it's a self-regulating body made up of professionals in the investment world that help come up with standards and rules for the business under, of course, the oversight of the SEC. But the SEC doesn't have the manpower or woman power, whatever you want to call it. They don't have nearly enough people. Okay, they don't have nearly enough people to oversee and regulate all investment professionals and products that happen here in the United States. However, FINRA is huge. It's a huge organization that's broad, has a lot of folks. Anybody in the investment world is by default basically a part of FINRA. Okay, all working professionals in this world, and they help to develop basically the generally accepted principles, the generally accepted principles for investments. So that's who FINRA is. They're the ones that develop the test to get into the business. They develop rules and regulations, penalties for not doing what you should in the business, and they're the ones that have put together this test. Okay, that's who FINRA is within the investment world. All right, let's get back to slides here. Okay. Are we seeing 1.1 requirements for registration on the top of your page? Hello, hello. All right, thank you. Just needed one person to say yes, we're good. Every once in a while I get stuck. If you guys have had me before, sometimes we get stuck on slides for some reason and nobody tells me. So we go like 10 minutes and we're just sitting on the same slide. Anyway, requirements for registration. So when it comes to being an investment professional, somebody who represents investment products and sells investment products to somebody else, it is absolutely required and mandatory that you have licensing, what's called licensing, and you must have passed some kind of basic investment examination or you're not allowed to sell investment products. Now, what's the difference between what's called a registered representative or an investment advisor? Some people in the world of investing are actually both. They're what's called dual license. So they're an agent or a registered representative of a broker dealer, and then they're also an investment advisor, somebody that kind of can independently manage and invest accounts for investors. So the main difference is a registered representative is subject to whomever they work for. A good example of this is kind of like an insurance agent that works for New York Life, right? In the end, that New York Life agent has to be loyal to the expectations, requests, and products of New York Life, right? They can't go out and just sell every single other product and never sell New York Life, or they're basically breaching, the fact that they're a representative what you would expect from the name, right? When you're a registered representative, you represent a broker dealer, investment company, or insurance company that you're registered with. Okay. And in the world of investing, when you first go to take the Series 6 or Series 7 exams, you actually have to have a registration somewhere in order to take those exams. You can't just go take it. You have to have a sponsoring entity in order to go take the test. Then once you take the test, then you represent, in essence, that entity that sponsored you to take it. Now, you can change, of course, but that's how the rules of the game work for investment professionals. Then investment advisors are more like brokers, okay? And what do I mean by that? Well, I'm still comparing it kind of to the insurance world. You have agents that are captive agents, and then you have brokers that can represent anybody. Investment advisors are more in the space of trying to give an objective advice, no matter what the investment product, where registered representatives are representing the company they work for. If you go to Edward Jones, then you should probably expect to get Edward Jones products and Edward Jones, be represented by products that are partners with the company Edward Jones, right? If you go to an investment advisor that's a broker, that's an independent investment advisor, then they can pretty well represent anything they want. They're not subject to a certain relationship or certain expectation. Now, if you want Merrill Lynch products, or if you want Morgan Stanley products, then you should go to a Morgan Stanley or Merrill Lynch advisor, right? Because then they can give you those specific products. If you want a Ford, you go to a Ford dealership, right? You don't go to a Chevy dealership to ask for a Ford. The same thing is true in the investment world. It's just something that most people don't really get, right? They think that every single investment professional is completely objective and could represent any investment product to them. And sometimes it's because investment people, professionals, kind of represent themselves like they could do whatever they want, when in reality that's kind of a misrepresentation, because they are definitely representing a company to you and the relationships of that company to you, which are specific to the company they represent, right? Either way, though, like I say, there has to be licensing that takes place, and that's where we come into the testing and the examination that this class covers some of the material from. We're not going to go into detail on these. There are rules, there are standards associated with almost everything an investment professional does. Everything from when they can market to people, when they could call them, when they can, how they can advertise, what kinds of advertisements they can use. Most all of it has to be closely monitored. A lot of it has to be pre-approved. It is a heavily, heavily regulated industry. If you were to interview anybody that you know that's an investment professional and ask them, would you say that you're a heavily regulated industry or not really? I think 99% of the time that person would say we are a very heavily regulated industry. We've got rules for everything. Everything from what kind of signs we can use, what kinds of advertisements, what we can put in emails, how we can talk about investments, when we can call people, what types of products we can use. I mean, there's just rules for just about everything when it comes to the investment world, okay? And there are penalties and fees anytime that you're breaking any of those rules. Now, sometimes when I say that, people will say, well, how come there's so much fraud then? If there's so many rules, how come so many people, get taken advantage of and we have so many problems with fraud? And one issue is that no matter how many rules there are, people are going to get greedy and try to break them, right? That'll happen. But another issue is most of the rules are created from problems that happened in the past, because the SEC and the FINRA create rules basically as a reaction to what's gone wrong, not a proactive thing to what might go wrong in the future. So they're always finding new, ways that people can get taken advantage of and trying to come up with new rules to try to protect you and I as consumers. The last thing I'll say is that many times when you hear a story about somebody, being a fraud or taking advantage of people when it comes to investments, they're not licensed. They're not even practicing real investment advice. All they're doing is trying to take money from people, right? So the regulations apply to those who jump through the hoops to get licensed and play by the rules. They don't apply, they can't protect you against somebody who doesn't even have licensing. And so one of the basic things that I would tell you to remember from this class, if nothing else, is if you're ever working with someone who is giving you investment advice or an investment opportunities that they're selling, one of the first things that I would do is check what's called BrokerCheck, which if you just Google BrokerCheck, what it's going to do is it's going to give you a site where you can put anybody's name, and check whether or not they're registered as an investment advisor. So if you all were to go to BrokerCheck and put in David Shipley, which is my name, you could actually see my work history. You could see whether or not I have complaints against me. You can see whether or not I'm actively licensed, to be able to sell investments. And I know that sounds like a lot of information about somebody who you just met, right? You didn't know me before today, but that information is public because I am an investment advisor. And so if somebody wants to check on me, they can go to BrokerCheck and find that information very easily. If you're working with somebody that you haven't done that on, then you're running a risk that you're working with somebody that isn't could be completely lying to you about everything they're doing. And it's not that it's perfect if they are licensed with BrokerCheck, but it is much less likely. It's just helping you a little bit to avoid some of the real shysters that are out there, and fraudsters that are just easily taking advantage. If you watch American Greed, a few episodes of American Greed, none of those folks are licensed with none of those folks are even worried about being licensed. All they're doing is just trying to convince people that they've got great opportunities that people should buy into. If they were doing it legally, then they would have to be registered and you'd be able to see them on BrokerCheck. Okay? So that's a way to keep us all a little bit safer when it comes to investments. When it comes to SROs, this speaks to what we talked about with FINRA. FINRA is that financial regulatory organization that oversees the test, right? The material for the Series 7 exam for people to come into the business. SROs are very, very important when it comes to investments. They're important when it comes to accounting, right? And other segments of the market too. But when it comes to investments, they do so much. They create a prohibited activities list. They help people with arbitration if there's complaints, so that it doesn't have to go to court potentially. They take in complaints against people, that are doing things that they shouldn't do. I mean, there's all kinds of different things that FINRA can help accomplish for the marketplace. And like I say, it's not a government entity. It's a government. The government definitely oversees FINRA through the SEC, but really relies on FINRA to come up with industry standards and rules for the business, because the SEC is too small. Like I say, the scope of the SEC is too small to regulate everybody and oversee everybody. They need the arm of the SRO, or the self-regulatory organization, specifically FINRA, to help them. Okay. One other quick thing before we get to the test material, and we'll call it good for slides tonight. There's a difference in investments between a primary market and a secondary market. Okay, the primary marketplace is where investments come into being. So this is another way to look at the primary market, is the IPO market, or initial public offering market. This is where people get really excited because a company is going to sell stock for the first time, and we all as investors can buy in. So back when Google did this some years ago, there was a big frenzy about buying Google, about buying, when Facebook did it, when GoPro went public. When these companies go public, or IPO, or have their initial public offering, that's the primary marketplace for investing. That's when you're buying the stock directly from the company that issued it. Okay, and then more commonly is the secondary market. Okay, so the primary market's where stock comes to be, right, and becomes public for the first time. That's the IPO market, or initial public offering market. The secondary marketplace is perhaps not as celebrated, right? We love to talk about IPOs and new companies, but the secondary market's the more common place for you and I as far as investing. This is where we buy stock from somebody else. Okay, so when you buy Apple stock, you're not buying it from Apple. You're buying it from somebody else who's selling it to you. That's why they call it an exchange. The securities an exchange, right? The New York Stock Exchange is an exchange for people to buy and sell from each other. It's not buying it from the companies, it's buying it from other investors. So the primary market is where stocks become public, right? So we can invest in them for the first time. That's when a company benefits, because they're actually selling those shares to the public and collecting the money from those shares. But in the secondary market, which is where we trade most of the stocks, if you and I went and bought a stock today, you name the company, Disney, Costco, Microsoft, Apple, Google, whatever company we're buying today, we'd be buying it in the secondary market through an exchange where we're buying it from somebody else who's willing to sell it to us. Okay? Or if we want to go sell our stock, same thing is true. We go to one of the exchanges, we sell it to somebody who's willing to buy it. Okay? And that's primarily what the stock market is it's an exchange of people buying and selling stock from each other. The primary market is people buying the stock and investors buying the stock directly from the companies. And it usually only happens at the beginning, right, of a company's public, when companies go public. Then after that, it's not as common. Most companies don't issue new stock very often because it's a costly thing to do. Okay? All right, so that's the primary and secondary market, a little bit about the differences between those. Like I say, most people think when they go and buy Microsoft, if they didn't know any better, that they're just buying it from Microsoft, right? They're buying stock from Microsoft. And the truth is you're not buying it from Microsoft at all. All you're doing is buying shares from another investor who's selling it to you. Microsoft doesn't benefit from that transaction at all. They only benefit if it's in the primary marketplace, and like I say, that's not as common for you and I as investors. The only time that happens in the primary marketplace is usually when a company goes public or has what's called an IPO, initial public offering. Okay? All right. That's all we want to cover on the slides. Any questions before we transition to what's going to be on the test this week? All right. So I'm going to go through these questions fairly quickly just to give you basic topics that you'll need to know. If you have any questions as I go through, if you need a repeat, just let me know. Number one on the test, you need to know what the Series 7 exam is. Okay, what is it? What is the Series 7 exam? Just know basically what it is. That goes back to that outline, right? It introduces what it is, why it's there. If you just read through that, you'll get that number one on the test right. Number two on the test, you'll want to know who is behind, what organization is behind creating and maintaining the test material for the Series 7 exam. We've talked about it a couple times tonight, but make sure you understand which organization is primarily responsible for the exam material, okay, and administering the test. You'll also have that from the outline material, but we've talked about it a couple times tonight. Number three on the test, you'll want to understand, let's see, understand sponsorship. So we talked about how if you wanted to go and sit and take the Series 7 exam, there's a requirement before you can do that you must be sponsored by a company, right? A broker-dealer, a company, some kind of investment firm. You can't just go take the test without some kind of company sponsoring you to go take it, okay? Understand that principle, you get number three right on the test. Number four on the test, you want to know what the CRD is. CRD. It's an acronym for something. If you understand what it is, you'll get number four right on the test. Number five on the test, you'll want to know what the outline for the Series 7 exam states as the basic topic areas, okay? So when you talk about the general content outline of the Series 7 exam, what is on it, what is not on it, you don't need to memorize them all, but if you're familiar with them, you'll be able to identify on the test which one doesn't belong, right, among some multiple choice answers. Number six on the test is a question about how many questions will be on the test. So once again, go to the outline, find out how many questions are on the Series 7 exam. You'll get that one right. Number seven on the test asks about calculators on the exam. Are they allowed or not? Number eight on the test asks about what the minimum passing score is for the test. All this stuff is in that introduction to the outline. Number nine on the test asks about grades, whether or not test results can be adjusted or updated or changed, or whether or not they're final. Of course, the outline will let you know that. Number 10 on the test asks you how many functions the exam covers. Okay, the outline will help you to understand how many functions the exam covers, so you can get that one right on the test. Number 11 on the test asks about what function 4 is. Number 12 on the test asks which function has 17 knowledge statements. Okay, something you'll need to look for. Which function has 17 knowledge statements? Number 13, how many knowledge statements are there? Number 14, what are knowledge statements? Number 15, Which knowledge statement has to do with ethical considerations? Okay, which function statement has to do, or knowledge statement, excuse me, has to do with ethical considerations? Number 16, what does statement 15, knowledge statement 15, have to do with? Number 17 just asks how many rules and regulation groups does the exam cover? Just the number of them. So this is all information from that outline. Number 18 on the test asks you what Regulation 8 covers. Number 19 asks about Regulation 42. Number 20 asks about Regulation 41. So when I say this, you'll just need to basically read up on what these regulations are, just really basically. Don't dig in really deep, but just make sure you understand what they are before you get to the test. Number 21 is Regulation 31. What is Regulation 31? Question 22 on the test asks you about knowledge statement 5. What is it? Excuse me, 5.12. Get that right. Knowledge statement 5.12. What does it have to do with? Knowledge statement 1.1.1. This sounds really weird, but you'll understand it based on the outline. Knowledge statement 1.1.1. What does it say? Rules and regulations number 12. What is that one about for number 24 on the test? And number 25 on the test, rules and regulations number 8. What is that one about? Okay. So you've got what you need as far as the test is concerned. If you made some notes, or if you're willing to review, the session later and take some notes, maybe slow it down. If you've got that information in front of you when you take the test, you'll be in great shape. So that's how you prepare this week for the test, is you go through the notes I just gave you, and you'll do great. Okay, any questions before we wrap up tonight? Any other concerns, issues with the course? Anything else that I can answer before we wrap up? Thank you for coming again, Chris, Judy, Wanda. Thanks for coming tonight. Appreciate you guys making the sacrifice to be here. Hopefully you felt like it was helpful to get the notes and information that you need for this week. But if you get stuck on anything, just let me know. Zip me a quick line like we talked about. Either text me or email me, and we'll get you what you need to know to get started. Hope you have a great week, and have a great night. Thanks for being here. Thanks, Judy. Have a good night. Good to see you again. Thanks, Wanda. Have a great night.